The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure. NetworkNewsAudio presents Wall Street Wants Cash Flow, and this gold market is finally delivering. Gold surged to new record highs in September 2025, outperforming the S&P 500, NASDAQ, and Bitcoin year-to-date, fueled by a weaker US dollar and expectations of strong central bank buying. Goldman Sachs now forecasts gold prices reaching $3,700 by the end of 2025 and $4,000 by mid-2026, with the possibility of $4,500 per ounce if private investors exit dollar assets in favor of bullion. In such a climate, gold's role as a reliable store of value is more apparent than ever. For investors, however, the time has come to look beyond exchange-traded funds and heavyweight producers. This year is shaping up to be the year for scalable junior producers such as ESGold Corporation, ESAU on Canadian Securities Exchange, or ESAUF on OTCQB, which is backed by permits, fully funded plans, and near-term profit potential. With its low capex, high-margin business model, and a clear pathway to production in 2026, ESGold offers investors the leverage and scalability that physical gold and ETFs cannot provide, positioning it as a compelling growth story in the current cycle. The company is one of several notable mining entities, including Newmont Corporation, Pan American Silver Corporation, Hecla Mining Company, and Freeport-McMoRan Incorporated, that are focused on leveraging the expertise to strengthen their position in the burgeoning gold sector. Instead of chasing greenfield exploration stories, ESGold is revitalizing underutilized historic mining sites with existing infrastructure. The company recently closed financing that leaves it fully funded to advance its flagship Montanaban project in Quebec and move forward with the Bolivar joint venture in Colombia. ESGold's two key projects together provide visibility on 2026 production. Another differentiator in ESGold's approach is to focus on tailings reprocessing, which combines low capital requirements with high margin potential. By completing Montanaban and advancing the Bolivar project, ESGold is positioned as a fully funded execution story with visible 2026 cash flow. Gold as the reliable hedge in 2025. The country's fragile financial backdrop continues to pressure the dollar's purchasing power, amplifying gold's importance as the global hedge. Billionaire hedge fund manager John Paulson recently reinforced this thesis, stating, quote, "The best place to go if your faith in the US dollar diminishes is gold as a reserve currency," end quote. In his view, strong central bank demand and growing trade tensions could drive bullion prices toward $5,000 an ounce by 2028. Gold's renewed strength is more than a temporary spike. It reflects structural imbalances in global markets. The combination of ballooning government debt, persistent inflation, and mounting geopolitical tensions is creating a perfect storm for sustained demand. Investors are recognizing that traditional safe havens, such as the US dollar and government bonds, are no longer offering the same level of protection, prompting a broader pivot into precious metals. However, for institutional and retail investors alike, physical gold often provides too little leverage. ETFs and gold bars preserve wealth but rarely deliver outsized returns. What Wall Street wants today are scalable operations, cash flow, and low-risk growth, which points to junior producers with permitted projects, low capital requirements, and replicable models are rising to the top of investor watch lists. The challenge is that most of the gold sector remains mired in exploration. The junior mining sector is notoriously high risk, with fewer than 0.1% of exploration projects ever becoming producing mines. Many juniors become stuck in perpetual drilling cycles, diluting shareholders without even reaching production. For investors seeking real returns, this creates frustration and underscores the importance of selectivity. This is where ESGold stands out. With cash flow expected in early 2026, fully funded and fully permitted operations, exploration upside without dilution, and a scalable model applicable to legacy mining assets worldwide, ESGold has emerged as part of a new class of near-term producers designed to thrive in this cycle. No shortage of opportunities. Instead of chasing greenfield exploration stories, ESGold is revitalizing underutilized historic mining sites with existing infrastructure. This allows the company to bypass many of the pitfalls that derail traditional juniors. By leveraging established assets, the company reduces upfront capital expenditure, accelerates timelines to production, and lowers operational risk thanks to known geological data. With more than 500,000 abandoned mine sites in the United States and more than 10,000 in Canada, ESGold has no shortage of potential opportunities. The company is highly selective, targeting only the most economically viable and strategically positioned projects with clear pathways to production. This disciplined approach allows ESGold to scale responsibly while creating a repeatable model that addresses market demand for efficiency and sustainability. Crucially, this model aligns with new industry perspectives and emphasizes adaptability. By selecting projects with strong infrastructure and proven mineralization, ESGold is building a platform that can respond quickly to shifts in market dynamics. This adaptability is what makes the company stand out among juniors and gives it the potential of becoming a significant producer in the coming years. Fully funded to execute strategic plans. ESGold recently closed financing that leaves it fully funded to advance its flagship Montanaban project in Quebec and move forward with the Bolivar joint venture in Colombia. With capital secured, the company is now executing its build-out and commissioning plans at Montanaban while progressing Bolivar through independent validation. Both projects are expected to move into production in 2026, giving ESGold visibility on near-term cash flow from multiple jurisdictions. Unlike many juniors forced into repeated dilutive financings, ESGold's clean capital structure allows management to execute its business plans with confidence. By securing the funding needed to reach commissioning milestones, the company reduces risk for investors and builds momentum toward its stated timelines. For institutions and retail shareholders, this level of financial preparedness signals credibility in a sector where undercapitalization is often the downfall. The company's fully funded status is particularly important in today's environment of selective capital. Investors are demanding stronger discipline from management teams, and those who can demonstrate financial readiness are being rewarded with increased attention. ESGold's ability to present a de-risked financial position places it in a small group of juniors capable of delivering on promises without constant returns to the market for additional capital. Two-project platform offers 2026 production line. ESGold's platform is anchored by two key projects that together provide visibility on 2026 production. The Montanaban project in Quebec is fully permitted and advancing toward construction and commissioning. Once operational, Montanaban is expected to generate cash flow from reprocessing gold-bearing tailings using modern circuits that improve recovery and efficiency. The Bolivar project in Colombia, secured under a Memorandum of Understanding, offers a second hub of production potential subject to definitive agreements and verification. The Bolivar asset expands ESGold's reach into South America, diversifying its portfolio and enhancing scalability. Together, these projects provide a multi-node foundation for ESGold to grow into a cash-generating producer with assets in Tier 1 mining jurisdictions. Having two distinct projects also offers risk mitigation. If development or commissioning delays occur at one site, the other provides a pathway to maintain momentum toward cash flow. This diversification of assets gives ESGold greater resilience and enhances its appeal to institutional investors seeking exposure to gold producers with balanced portfolios. Low capex. High margin business model. Another differentiator in ESGold's approach is its focus on tailings reprocessing, which combines low capital requirements with high margin potential. Modern processing circuits enable efficient recovery of gold from historical tailings, often with the added benefit of environmental remediation. This positions ESGold to meet both investor demands for profitability and community expectations for sustainability. By keeping capital expenditures low and margins high, ESGold aligns itself with institutional preferences in the current cycle. Investors are increasingly seeking companies with capital-efficient operations capable of generating strong internal rates of return. ESGold's replicable model, tailings to cash flow to self-funded exploration, offers a clear roadmap for scaling across multiple jurisdictions in the Americas. The environmental, social, and governance angle further strengthens the company's positioning. By cleaning up legacy mine sites while generating cash flow, ESGold is demonstrating how modern mining companies can contribute to environmental remediation while delivering strong returns. This dual focus on profitability and sustainability is a key factor in attracting institutional capital. Macro tailwinds strengthen ESGold's position. With gold trading at record highs and central banks maintaining strong buying activity, the macro backdrop remains highly supportive of gold producers. Investors are increasingly selective, favoring companies that combine de-risked assets, defined production timelines, and scalable business models. ESGold delivers on all three fronts. By completing Montanaban in Quebec and advancing the Bolivar project in Colombia, ESGold is positioned as a fully funded execution story with visible 2026 cash flow. Its low capex, high margin model offers leverage to rising gold prices without the risks that plague early-stage explorers. In an environment where gold demand is strong, capital is cautious, and investors seek certainty, ESGold provides a differentiated value proposition. In the current economic climate, investors are prioritizing near-term cash flow, scalable operations, and risk mitigation. ESGold addresses these priorities directly, offering a pathway to production with reduced risk and the potential to replicate its model across other high-value sites. As gold continues its historic run, ESGold stands out as a junior producer prepared to capitalize on the cycle with a platform built for growth. This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.